Joining us today is the legendary Doug Casey. Doug is a world-renowned investor, speaker, and author. In this interview, we get into today's inflation print and where Doug thinks interest rates are going. Doug gives us his thoughts on where he thinks the future of the US dollar as a global reserve currency is heading. And I even get some anecdotes from Doug out of his days as a junior mining speculator traveling 160 countries and times that he thought he was near death. All right, everybody, enjoy the interview. Doug, thanks so much for joining us today.
Well, it's a pleasure to be here, Steve, although here is different from where you are. I'm on the water in Virginia, actually, on the Chesapeake Bay right now.
Okay, so I'm going to start this interview off with a different place than where I wanted to, but I was just chatting with somebody yesterday, I think that was based out of Vegas. And I asked them, what's it like when you just go around to stores and just because I was in Florida, say last spring, and I noticed that every Dunkin' Donuts I saw, I'm a Canadian boy, I got to have my coffee in the morning. I go to every Dunkin' Donuts that I see, and they would close down the restaurant portion and only have the drive-through with a sign in front of the store saying, "We can't hire enough people." What's it like where you are? Are you noticing these sorts of things?
Well, I'm in a very backwater area. I sold the ranch, which I'd had for 20 years or more in Aspen, Colorado, because the ducks were quacking and I felt it was time to feed them. And I don't like being in Aspen anymore for all kinds of reasons that are probably irrelevant to our discussion. It's turned into a people's republic. But so I moved to a very different part of the country. This is a backwater, lots of small houses and churches everywhere, and fields growing wheat and corn and soybeans. So what's it like in small town Virginia right now? The COVID hysteria, I think, devastated small businesses. There are still empty stores where the people that owned it went out of business and haven't come back. So but things are relatively normal here. That said, I mean, people are adjusting to expensive gasoline and more importantly, expensive diesel in this part of the country. Life and commerce goes on. So we'll see what's next. But it's an interesting question you asked, because I'm always looking for boots on the ground appraisals of what things are going on. I put little or less confidence in the numbers that come out of the Federal Reserve. Well, I put more confidence in their numbers than I do those of the Argentine Central Bank, because I live in Argentina most of the year, actually, and you can't trust their numbers at all. But you really can't trust those coming out of Washington either. But answer to the question, things seem to me to be pretty normal. But I live in a little silo, which I think we all do, which is, I suppose, why you asked that question, to get a view of a different marmot sticking its head out of its silo before it ducks back in.
There's a lot of places we could go, but you just brought up the data. We had the CPI print this morning. For example, shelter came in at, I think the number was 5.7%. Now we can know just from objectively looking at data that shelter, based on, I think is it Redfin, is up, rent is up around 20%. Real estate statistics using, is it Zillow, is up 15 to 25%. And here we're getting the Bureau of Labor Statistics telling us that shelter is only up 5.7%. Is there any reason to really pay much attention to the data that the CPI or that the BLS is putting out?
The only reason to pay attention to it is because apparently some people actually do pay attention to it. I don't, but I like to know what other people are seeing, and a lot of them apparently believe it. There's a guy named John Williams who for many years has put out a publication called Shadow Stats, where he tracks US government figures according to the parameters they used to use for things like inflation and employment and so forth. And if you define those words the same way that they did once upon a time, the numbers are much, much uglier than they are today. Because in today's world, almost everything is politicized, which means you can't believe anything. Look, I trade commodities. That's one of the things that I do to amuse myself. And it seems to me that all commodities, we're talking about everything from, we're talking coffee to wheat to soybeans to cattle. They've all like jumped to a new level. Commodity prices basically rotate around costs of production, okay? And costs of production for all these things, the raw materials of civilization, if you would, have gone up a lot. And the prices have gone up a lot. They fluctuate, I mean, up and down, but I think they've reached a new equilibrium level, which is to say, corn used to be $3 to $4. Now, the new equilibrium based upon production costs is more like $6. And it's the same with all these things that I just mentioned. So, yeah, there's a lot of inflation, and it's 100% caused, well, not 100%, but almost, by the flood of new currency units flooding out of Washington and New York. And it's going to be devastating in the long run for the average person and for society in general.
So do you think inflation is here to stay?
Well, let's look at it this way. The US government has become a behemoth. Most people are completely unaware of the fact that at the beginning of the 20th century, the US government had very little involvement really in the US economy, and its costs, its expenses were financed entirely by import duties and excise taxes, and it amounted to like 5% of the economy, kind of a rounding error. But now the US government takes about 50% of the economy directly and indirectly, and then you've got the states and the localities that are doing their share. I mean, it wasn't so long ago that states didn't have sales taxes. I mean, just when I was a kid, they didn't. And then it was like a 1 or 2% sales tax. And now in some places it's up to 10%. And same thing with state income taxes, which are talking about places like California, New York, and Massachusetts can go up to 13%. And they used to be basically nothing. So the state has become the overweening force in the economy. And it's not going to end well for just that reason.
Some news that came out today that we published a story on over at the Deep Dive. One of the largest cell phone providers, TELUS, filed with the CRTC, which is a branch of the Canadian government, to start charging for credit card processing fees. So you are going to have to pay a fee just to pay your bill. Do you think that we're going to get to a point here where we just see companies finding interesting ways to pass through the inflation to the consumer?
Well, it's interesting what you just said, in that the average American or Canadian doesn't blame the government and its money creation policies through the Reserve Bank or the Federal Reserve. They don't blame the government for inflation. They blame the corporations who actually deliver goods to them. Hey, it's the fault of that butcher that my steak costs more. It's the fault of Exxon that my gas costs more. It's not their fault. They're actually creating real wealth. It's the government that's destroying the currency. That's where the problem lies. But what's going to happen? Look, in the United States, the Biden regime has just passed a gigantic, massive spending bill, hundreds of billions of more dollars. Where are they going to get the money to get that? Well, from more taxes from the people. But still, with all the taxes that they're extracting, and we can go back to some changes that they're making that way, something called modern monetary theory. I don't know if you looked at it or whatnot, is actually being implemented. And it's a radical change in the way things are done. But forgetting about that for the moment, the US government is running $1 trillion or so deficit right now, and that's going to go to $2 or $3 trillion a year. Where are they going to get that money? That's borrowed from people out there. But Americans don't have much net savings. They're not borrowing from Americans. We're not borrowing from the Chinese and the Japanese anymore.
We're certainly not borrowing from Russia anymore.
No, that's for sure. So who's buying all the federal government's debt? And it turns out it's the Federal Reserve. The US government runs $1 trillion deficit, and it sells most of it to the Federal Reserve. And they buy it, and in commercial banks, Citibank, Wells Fargo, whatever, where the US government has accounts, they take the debt and they credit the US government's account with Federal Reserve currency, which it then spends as dollars. So the US and frankly, the Canadian economies are both being subtly nationalized, subtly and slowly nationalized.
So do you think we're going to get to a point here where we're going to see and it sort of is happening right now, it's just nobody's really talking about it. We're going to see quantitative easing coupled with high interest rates. You think that's a likely scenario?
Well, we've got to ask ourselves, what determines interest rates? Now, a lot of people think that the Federal Reserve determines interest rates, and it does to a certain degree. But when you go to sell a bond, let's say inflation is running 15% in real terms, which I think is probably the actual number right now. Prices are rising at the rate of 15%, and the money supply is being expanded actually above that. So that tells me it's actually going to go much higher in the future. Why would anybody buy a US government bond for 3% when it's losing value at 15% per year? You're suffering a net loss of capital of 12% per year. So at some point, I expect that interest rates, long-term interest rates, are going to go shockingly higher, regardless of what the Fed wants or thinks or does, simply because nobody will buy corporate bonds or other bonds. Why should I buy it and guarantee myself a 10 or 15% loss? So I think the bond market's going to be the first to go. I mean, the bond market's the worst place to be. They're a triple threat to your capital. You've got the currency depreciation risk, aka inflation risk, which is huge, 10, 15% of your capital right there. You've got the potential default risk. Well, probably not true in the case of national governments because they can print money, but in the course of commercial enterprises, they can default. And it's bonds are the last place to be.
So how
it's not going to help the stock market either when interest rates go much higher, which I think they will, and with the market, with monetary policy and tax policy, things going up and down like an elevator at the lunatic at the controls, which is actually a very good analogy because things are out of control. Things are going to become unpredictable and unpleasant, I think, in the markets.
So the common argument we hear when we hear about higher interest rates is that the federal government can't afford that. What would be your response to that?
You're absolutely right. It can't afford that because let's say the disclosed national debt of the United States government is, what is it, about 32 trillion now, 33 trillion, something on that order. I mean, it's going up so rapidly. And what do they pay in interest for that? Well, let's say they're paying an average of 2%. or perhaps 3% because interest rates have gone up. So it's costing them, well, let's say $700 or $800 billion per year just to finance it. Interest rates go up to 10% or 12, and people forget that back in the early 1980s, the U.S. government was paying up to 19% on T-bills. This is ancient history to most people, but it happens to be a fact. So let's say interest rates go up to 10%. Now the US government is paying like $3 trillion a year in interest, which is more or less equal to everything else that they spend. This is what we call, to use an overused word, unsustainable. So we're headed for a brick wall, which we have been for a long time. It's been predictable for a long time. But now, having jumped off a 100-story building, we're at about floor 5, and the ground is looking pretty close. But hey, so far so good.
Mm-hmm. Do you think it's possible that right now Biden is doing everything he possibly can to try to bring down inflation, and then after the midterm election, it's going to be just let it run wild again?
No, listen, you've got to understand that the people that won the election, or I guess they won it. I mean, this is apparently very much in dispute, but who knows? The Bidenistas, these people have the same psychological makeup as the Jacobins in France in the early 1790s, or the Bolsheviks in Russia in 1917, or the Red Guards in China in the 1960s. They are the same people philosophically, the way they think, the way their minds are structured, the way they want to reform society. And now it is happening in the US, and I think in Canada and a lot of other countries. It's like a mass hysteria has overcome the world. So by way of answering your question, these are not the kind of people that believe in sound monetary policy. So no, things are out of control now, and they're going to get worse because these people are looking for the government to solve the problem. The only way to solve the problem is basically to put the government in reverse, start abolishing, not just pruning back agencies, but abolishing them wholesale, firing their employees, letting them go, and pouring Agent Orange in the ground where they grew. They serve no useful purpose. They're purely destructive. And name an agency, and I think I can show you how that's the case with all of them. At that point, if you did that, you could start radically reducing taxes, which keep that money in people's pockets. They'd be able to invest in businesses and research and living better. But things are going in the opposite direction. We're heading in the same direction as so many communist and socialist countries have in the past. It's actually quite scary.
So we all most people I talk to in capital markets, they all agree that eventually all this quantitative easing, easy money policy is going to end with some sort of destruction of the US dollar, but nobody really knows sort of when that's going to happen or the mechanics of ultimately how it unravels. Do you have any sense of how close we are to the point where the US dollar could be losing its status as the global reserve currency?
Oh, I think we're very close because do the Russians want to use the US dollar to buy and sell things? Absolutely not. In fact, they've proven that with only accepting rubles for oil. Mm-hmm. Do the Chinese want to use US dollars? No, they don't. But the fact is, when most countries, third-party countries like Russia and China in the recent past, traded with each other, the Chinese didn't want rubles. They don't trust the Russians. They don't trust the value of the ruble. And the Russians really don't want yuan for all kinds of the same reasons. So they'd use a third-party currency, the US dollar, which is the international numeraire. So everybody all around the world uses US dollars, okay? that is coming to an end because nobody trusts the US dollar anymore. And this was demonstrated with capital letters when the US basically confiscated hundreds of billions of dollars of Russian assets, not to mention assets of individual Russians who have, they may be bad guys, probably are, but if you're going to have a rule of law and not going to have international chaos, you don't just steal somebody's yacht because of their nationality. So, no, everybody wants to get rid of dollars because they realize it's a hot potato. It's the unsecured asset of a manifestly bankrupt government. So, no, the dollar's on the way out. Question is, what's going to replace it? It's going to happen. I don't know when, but it's absolutely inevitable at this point, I think.
Yeah, it's funny you bring that up. There was a huge Russian company called Rusal International. They're an aluminum producer. They actually, and this didn't really work its way into the news. Nobody was really talking about it, but they just did a huge bond offering denominated in the yuan. And, you know, of course, the mainstream media, they don't want to tell us about any of the successful things that are happening with Russia and China right now that could dethrone the US dollar. But this seemed like pretty big news that and there's a lot of other news too that we can point to that shows that, you know, there's lots of countries looking at moving over to be a part of the BRICS group. Do you think that we're going to get to a point where gold ends up becoming the global reserve currency again, or in some form?
Personally, I have no doubt about it. Now, why might that be? Because, look, it was in the 4th century BC when Aristotle defined the characteristics of a good money. And a good money has to be durable. That's why we don't use wheat as money. It has to be divisible. That's why we don't use real estate as money. It has to be convenient. That's why we don't use lead as money. It has to be consistent. That's why we don't use diamonds as money. They're very different. And it has to have some type of use value so that you don't get stuck holding the bag with a piece of paper. So that's why gold has always been quite good, because it's about the only commodity that fills all of those 5 characteristics. And I might also point out, it was irrelevant to Aristotle, but it can't be created out of thin air, which the dollar can be. I mean, by fiat. That's why they call it a fiat currency, because it can be made. So yeah, we're going to go back to gold because, look, the Indians don't trust the Chinese, and the Russians don't trust the Indians, and the French hate the Germans, and the Germans hate the Dutch, and everybody hates everybody. They don't trust anybody, really. So that's why you use gold. You don't have to. It's the only financial asset that is not simultaneously somebody else's liability. Now, a case can be made that, yeah, silver is a reasonable money also. It's okay. Bitcoin, I think, might turn out to be a reasonable money, but I can't come up with any other alternatives.
Do you think that China stockpiled a ton of gold behind the scenes?
Well, what we think we know is that China is the world's largest gold producer, but they don't export any gold. And they actually import gold. And I can tell you, having been to China a lot over the years, I've been to 160 countries. I've lived in 10. So wow. I'm pretty internationally oriented. And I can tell you that at least the last time I was in China, there are gold shops in any city in China, lots of them, where people buy gold as jewelry, basically for a few percent above the spot price. So the Chinese are very oriented to accumulating gold. And the government seems pretty much in back of that, since they have a Shanghai Gold Exchange right now. So, yeah, I think now whether the average guy in the future is going to be able to use gold directly for his savings and so forth, I hope so, like it was in the US before 1932, 33. Everybody in the world, look, the government shouldn't be in the money business. I know that's a radical, outrageous statement to make, but that's a fact. I mean, money is about it's the lifeblood of economy. So it's actually the last thing where you want to have the government involved, and politicians and the kind of people that become politicians. I mean, it amazes me how people apatheicize these people that get into elected office. They're not the best and the brightest. They're the poorest and the worst kind of people. You got two kind of people in the world. You got people that like to deal with physical reality and manipulate atoms and things. And then you got people that like to manipulate other people. And those are dangerous people. And they are inevitably drawn to government. So we have horrible people. I don't care how glib they are or how nice they sound. People that get into politics are dangerous, oftentimes criminals, frankly.
So, Doug, I got a million more questions for you, but we've kind of ran out of time here. For our viewers that want more Doug Casey content, where can they go to?
Well, if you want to hear more of the stuff in a lot more detail, and we could go on for hours if you want, but I have a podcast called Doug Casey's Take on YouTube. At least it's still on YouTube. And then I have internationalman.com, which is a free blog, which has a lot of interesting articles. And I've stopped writing nonfiction, and I've gone to writing fiction, because there are a lot of things you can say in the form of fiction that you dare not say in nonfiction. This is the third book in a series, the Charles Knight series. First book was Speculator, about the junior mining market and boy soldiers in Africa and making millions of dollars in the market and stuff like that. Then Drug Lord, when Charles gets involved as a drug lord, and now he's an assassin. And the radical stuff is still to come, hopefully.
So he goes. So the main character's name is Charles. He goes from a junior miner speculator to a drug lord to an assassin in the 3-book series.
Yes, and it's going to get more interesting because, of course, he's accused of being a terrorist as a result of this in book 4. And then he goes back to Africa, where book 1 takes place, and becomes a warlord, where I endeavor to show that a warlord could actually be a good guy. And then it gets really weird, but that's too far in the future with books 6 and 7. So start with number 1, speculator, even before you get to assassin. It's more relevant. It's more relevant to our market here, small cap stocks, because it talks about how Charles starts out as a kind of a lower middle class boy in Montana and gets interested in mining because he's interested in geology and he's interested in money, and gets lucky with the penny stock, goes to Africa to investigate it, and gets into all kind of trouble, both in the stock market and in the semi-mythical nation of Gondwana. So start with speculator. I've got a copy of not speculator.
Would it be fair to assume that some of the sort of encounters or stories that Charles has are actual anecdotes that happened to Doug Casey?
Well, it is said that everybody's first novel is at least semi-autobiographical. So the answer to the question is, yeah, kind of. But I have a co-author, John Hunt, and he's added a lot to the party. And John's an MD, but like many MDs today, although he keeps his license, he doesn't practice because being an MD is a pain in the ass in today's world.
So one last question for you. You've been investing in junior mining for decades. You've been to 160 different countries. Have you ever had a moment going and looking at any of these properties where you thought that you were going to die?
Yeah, there actually were a couple, mainly due to my own stupidity. Uh, because I've been on lots and lots of mining trips to all kinds of crazy places. And I don't go on them anymore because there's a time and place for everything. But yeah, uh, yeah, there have been. And I guess I'd like to die peaceably in my bed as opposed to slipping and falling off a 200-foot
Can can
cliff.
can you share either of the stories of what happened?
Uh, what would be the weirdest, most interesting thing? I, I mean, likely it's mostly due to my own stupidity. Like one time in Colombia, we had to cross a gorge, not a big gorge, it was like 15 feet. Okay, but it was like 30 feet down onto rocks. So if you fall, you're probably dead. And what they'd set up was three pieces of bamboo with two little ropes on each side. So you had to balance yourself on the bouncing bamboo walking across. And I did that. And I said, this is insane. I shouldn't be doing that. And, another time in China, in the mountains of Sichuan, why I felt I had to actually look at the hole in the ground, which could only be accessed by walking about, I would say, 100 feet on a very narrow ledge with a big drop below us. Well, I did that. Wait a minute, this is crazy. Because anything can happen. You can get vertigo. Your knee can lock up for whatever reason. All kinds of things. The rock could turn incompetent, and then this is crazy. So I don't do that stuff anymore.
Yeah, well,
And,
I'd
and
be
there are
terrified.
and there are other things in with unfriendly people. Like uh, our friend Chris is from the Philippines, and I'm a big fan of the Philippines. I've always loved the place. But you go down to Mindanao, a lot of the people there don't like white guys because when the Marines in the Army invaded the Philippines after the Spanish American War, uh, I mean, nobody knows for sure, but they probably killed about, estimates vary, 100,000 Filipinos, and mostly in Mindanao. And, this is kind of part of the family history of people. They don't particularly like us. And, I thought it was scary sometimes down there. So,
Well, Doug, this was great. We really appreciate you hopping on here. I know our producer Chris has been chasing you for months trying to get you to hop on and chat with us. We really appreciate it. And hopefully you'll come back on in the future as this crazy vortex of global macro events is seemingly going to lead us somewhere, and we're trying to make sense of it all. I've been following you for years, and I always appreciate your commentary. So thanks so much for hopping on here today.
thanks. And perhaps when I talk to you next, I'll be back in Uruguay or Argentina. Unless, of course, we get martial law around the elections here in the US. Maybe, maybe not. Who knows?
Let's hope not. Thanks so much, Doug.
Thanks.
All right, everybody. Thanks so much for watching. If you haven't already, please hit the like button, subscribe, and ring that notification bell. And also, if you could, let us know what you think in the comment section. All right. Thank you, everybody.